imagine a world where the global population is educated about their finances and actually spends less time managing and organizing their money, but still reaps the rewards that this higher engagement delivers. And of course, we are looking at many of the innovators that are making this happen right before our eyes. So I'm super excited to introduce this panel. These are the leaders behind the mobile first apps that are going to change the way we're managing, using, and organizing our money. So without further ado, I'm going to let each panelist introduce themselves, and starting with Katy.
Hi, my name is Katy Gibson, and I'm the Vice President of Product Applications at Yodlee.
Jim Del Favero, I'm the Chief Product Officer at Personal Capital. We're a digital wealth management platform combining both personal finance technology and financial advisors to help people manage their money.
I'm Ryan Graciano. I'm CTO at creditkarma.com, and we're all about making credit and financial services accessible to everybody.
I'm Paul Zhang, CTO at AvantCredit.com, and we're an online personal loan provider, totally online.
So thank you, guys. I mean, all of you are really disrupting with mobile-first experiences. And so maybe what you could do, kind of go across the four of you and talk about that mobile-first experience you're building and a little bit how it's disrupting various audiences you seek.
You want to start at the other end?
Yeah.
Sure. So at AvantCredit, we are a totally online personal loan provider, right? And so our main competition these days are some really old, 80-year-old companies that are still in a very brick and mortar type of business. But for us, what we see is there's a great shift in demographics to moving online, and especially mobile. In fact, more than 60% of our traffic in the 18 through 35 demographic are coming to us through mobile. So what we've really focused on is building out our mobile experience at the same time as our desktop experience, right? So we're focusing on making sure that we are presenting the right type of information for people seeking online loans, for people looking to apply in order to make their experience very seamless, very easy. And that's kind of what we've been focused on. We're disrupting the way that people apply for loans. It's no longer something where you have to go and spend 3 or 4 hours with a loan officer, fill out applications by hand, bring in documentation. What we're doing is we're bringing everything online to the devices that you want to connect to us with, right? And we've cut down the experience to 10 to 15 minutes, instant approval. It really is just like a vastly better experience in our opinion, in dealing with online lending and online finance in general.
So Credit Karma was founded with the idea that credit information, your credit report, your credit score, basically all information about you should be accessible by you for free. 7, 8 years ago, that really wasn't the case. You had to pay somebody who held that information just to understand why you may have been declined for a product that you may not have expected to be declined for. Mobile is really interesting for us because it gives us access to an entire segment of consumers that isn't very motivated and connected to online services. So we see a certain segment of the population tends to be lower credit consumers, very connected to mobile, and they tend to sign up for mobile first. So mobile is a really interesting channel for us, and we see, as we see it, there's a place for both mobile and desktop in the ecosystem.
So at Personal Capital, I think if you look in the finance space in general, if you were to go to the App Store and download a finance app, anything from a traditional financial institution will require you to have an account with that financial institution before you can do anything. It's just a bass-ackwards model of dealing with today's consumers who are used to, I have it free, I can get a benefit before I pay for something, and I get some amount of experience before I commit to a relationship. And so with Personal Capital, we're leading with free tools powered by our friends at Yodlee, and at the place where people make financial decisions. So the days of people sitting around a computer on Sunday nights doing their banking and reconciling their bank statements has been dead for years. Financial decisions are made while you're walking across the street in a crosswalk, almost getting hit by a car, checking your balance to see how much you can afford to spend. And so having free apps delivered where you need them, is driving 70% of our customer acquisition and over 60% of our usage is all on mobile. And then the challenge to companies such as ourselves is you have this limited screen, even though the iPhone 6 Plus is even bigger, but you still have a limited screen and a limited attention span. And so all the heavy lifting has to be done on the back end in order to deliver kind of this magical just-in-time experience for people on mobile devices.
I'm going to piggyback on what Jim said. So at Yodlee, we are refer to ourselves as the financial platform. We a lot of the services that we have up here are powered by Yodlee data, and we build mobile applications that primarily are sold to financial institutions. We have a new direct-to-consumer product that's coming out. It's called Tandem, and the purpose there really is shared financial management. So a lot of our research and work that we were doing internally was showing that people, while you manage your own finances as a head of household, you are also helping manage your family's shared finances. Or for the younger generation who are living with roommates longer, who are, have much more social lifestyles, social financial sharing is a big part of what they do. And so Tandem is meant to help with that financial sharing. It creates a network of users. The app is a mobile application. And as you mentioned, a lot of the application is about sharing financial data with each other, splitting expenses, splitting bills, and things of that nature. And a lot of it is running in the background. We expect that the user will have this app in their pocket. It's going to alert them when they need to be notified of things that are taking place, and that they'll be able to take action based on the alerts and notifications that they're receiving.
And that's one of the things I think mobile really delivers, and I alluded to it before, was that feeling of control and education without the increased time, managing it, understanding and whatnot. Is kind of part of the tools and the APIs in mobile enable that education to happen. And maybe you guys can elaborate a little bit more on it, but I think it's just the beginning of what could happen. I mean, we used to require folks to go into a retail environment to obtain funding or being lent money, and now those things are being done on mobile first. And it's pretty exciting what this medium uncovers, not only to educate but also empower people.
Yeah, I think that when online applications came out for financial management specifically, they were very much tailored on the bank experience, which meant that you were going to a bank and you were going to different departments within the bank, and you were, you were taking care of what you needed to take care of. And I think that with mobile, it's enabled a paradigm shift, where as opposed to you having to go to your bank site, log in, and take care of your finances to sit on the couch every other week and pay your bills, now your bills come to you and you can take action. So it is truly this just-in-time experience where there's an engine running in the background that is helping you keep track of your finances and make you feel more in control.
Yeah, I mean, like for us, right, I think it's a mobile experience, like the other panelists have said, has to be tight, right? Like it has to be something that can keep somebody's attention span for the duration, like while they're on their device. And that's that's really been enabled in the past couple of years by the amount of things you can do. Like for example, right, like for us, we are a lending corporation, so we have to do a lot of verification, we have to do a lot of checking, and normally if you're at a bank or you're at a traditional provider, that involves a lot of documentation, right? But what we're offering, like what we do is we interface with a lot of providers like Yodlee. We interface with a lot of backend services that basically make it very seamless, so we can bring a better experience to mobile, so that enables us, the consumer to, finish the application in 10 to 15 minutes, right? Like it's kind of the whole ecosystem of not just mobile technology, but backend technologies and OCR, automated services that kind of help financial institutions kind of make automated decisions that really enables us to bring a really nice experience to a device that's as small as your phone.
So talking about platforms, we heard a lot about iOS today, and quite frankly, the buzz going on about the watch is pretty significant. But the reality is they only have a small percentage of the market share. Android is powering the majority of these phones through various fragmented experiences. But there's definitely some differences between the two audiences, the iOS users, the Android users, and perhaps you guys can elaborate on how that plays into your development and thinking around your app.
We see this a lot. So we're a wealth management platform, so we provide free tools, and obviously we're looking for people who have investable assets to become paying customers of our portfolio management service. If you look at as a percentage of registered users, on iOS, on iPad, maybe 25% of all registered users have more than $100,000 in investable assets.
Interesting.
iPhone, a lot more volume there, lower rates, maybe 18%, 15, 18%. On Android, it's like 4. If you go into the Google Play Store, look at the top 50 Google Play Finance apps. No joke, like 10 to 15 of them are prepaid debit card apps. And that's just part of iOS is a premium service, it's a premium device, it's a premium price, and it's a different customer base. So Android is ubiquitous because it's free on all kinds of devices. So I think when looking at the type of market you're in, like if I am a lender, I'm going after my potential customers on Android.
Okay.
If I'm someone like a lending club and I'm looking to get people to provide money to be lent, I'm going to iOS. So I'm pairing up iOS users for lending, and then the people making the loans are on the Android side, or people taking the money out are on the Android side. So there are big differences in those platforms.
And then there's the challenge for people. So for example, for us, we help power a lot of banking applications, and bank has to be ubiquitous, right? You can't say as a bank that I'm going to serve this part of the population or that part of the population. You have to have applications that go across the board, and so the challenge there has been, what's the best approach to make sure that you can hit people on all the different operating systems in a timely manner, and so, hybrid is probably the best approach to take there.
Yeah, to echo what Jim said, we actually also see a pretty significant difference in iOS and Android populations. Because we're Credit Karma, we slice and dice everything by credit and financial profile, so we know exactly who's using what features and what platforms. And we see Android skew definitely lower in credit. They tend to hover around, the bulk of consumers are around 600-ish credit score, whereas iOS is actually a full 50 points above that. So that changes the way we think about how we're marketing both platforms and the kind of offerings that we make available on those platforms. And it also makes us think about what we're putting to market first. If you're also going to say that, well, lower credit consumers tend to go mobile first, then it informs that, well, we should probably go out with Android first, right? Because those are the people that are on that platform, and those are the people that actually want that access.
I mean, corresponding data point, for us, Android far outstrips iOS users who are visiting our application. For us, the biggest concern is making sure we have a consistent experience across all devices. And Android is slightly more fragmented, like you say, and it's just another technical challenge that you have to handle.
So what's keeping widespread adoption on mobile, especially in the kind of fintech arena? Obviously security could be one, reliability is another. What's your thought on those components, or some that I haven't mentioned?
I would argue that it has been extremely successful. I think the adoption rates that you're seeing, year-over-year adoption rates, have been pretty impressive. I think, are there enough good financial management apps out there? Maybe that's one of the things that's holding, full-scale adoption up. But if you look at institutions that have mobile applications, especially millennials are definitely skewing more towards mobile. And in fact, with the younger generation, a lot of them are going directly to mobile as opposed to starting on the web and then migrating.
There's at least one good financial app.
Yeah.
I think app discovery is a large part of it. At least on Android, for us, it's been a big issue. You know, what I think Apple said, they have over 1 billion apps now, I mean, some ridiculous number of apps. Of those billion apps, probably 999 million are clones of the other apps that are actually good. App discovery is really hard. Marketing into that channel, like you have this limited capacity. One of the frustrating things about the iOS store is you don't know how many people visit your page in the iOS store. I would love to know that, right? That's a top of the funnel metric that you want to know. Let's say 1 million people visit your iOS page and only 100,000 people downloaded the app. And of those 100,000, how many registered? And so it's discovery, it's awareness from what they saw on the app page. Like, let's say you got a feature. We got featured on the front page during iOS 7 launch last year. Massive traffic, but do people really know what your app does? So it's a limited opportunity to really express what your benefits are, what you can do. And a lot of financial apps, a lot of the good ones are more complicated because finances are more complicated. Even if you make it as simple as humanly possible, it can feel overwhelming. You know, this isn't Flappy Bird, right? And so I think those are some of the challenges that as an app developer, you know, we see in getting adoption.
Getting away from that paradigm shift of like, your app has to do one thing really well. And for financial management, usually you want to do ideally more than one thing.
Right, we aggregate, you know, over 12,000 financial institutions. Our average user has 15 accounts linked, right? And we do, you know, deep portfolio analysis, we do transactions, we do balances, we do alerts, we do notifications, we'll look at investment fees, we do all kinds of stuff. And then you go to some other people, their view is, I'm gonna build an app to do each thing.
Yeah.
And then your experience is, you have an entire page of apps that each one does one particular thing. So it's a challenge.
Yeah, I think partner integrations are also a challenge. That's a challenge for us, definitely. Part of what we're trying to do is shine a light into the approval process so that there's a lot more transparency in financial services products that you can actually achieve, which is particularly interesting if you're in, you know, the middle America 670 average credit score segment where it's very difficult to determine what you can or cannot apply for. What our platform does is it streamlines what you're looking at by score and predicted approval rates. So we'll actually try to predict what you can get and put that in front of you. But the barrier on mobile is that not every partner that we work with has actually built out an application form that works well on mobile. So they might find a product they love, they might be really excited about it, we might have given them a lot of confidence and they click through and now they have a desktop view, it's asking them for their SSN and the JavaScript doesn't work. It's just the whole thing needs to work seamlessly. And I think that's a challenge across a lot of different financial services verticals where it's not just you building the platform. You have to be working with your partners and you have to convince them of the value of going mobile first.
I 100% agree with that. I mean, one of the hardest challenges about building a really good customer experience is integrations with third parties, whether it's a custodian, whether it's someone like DocuSign, whether it's, you know, KYA type stuff. You know, I just had an email from someone saying, well, yeah, it fails 1 every 10 times. This is a partner. It fails 1 every 10 times, but that doesn't sound too bad. And I'm like, are you kidding me? You know, it's just being new in fintech. Part of our job is we beat our heads against traditional financial services companies, trying to get them to join the modern era.
Yeah.
And that's the hardest thing. I think a lot of it's the hardest thing of our job.
Yeah.
You know, it's like, why can't we do what makes sense? Well, we've done it this way for 50 years.
Well, that's kind of one of our legs up on our competitors. So, I mean, like, but I mean, like, even outside of that, from our perspective, right, like, some of the challenges with having people use mobile to access our product is, you know, like, it is very like, Byzantine industry, right? So if you're talking about being a lender, like a first-party lender, there are a million disclosures you have to show your consumer. There's like there's something that basically requires there's certain disclosures that requires the consumer scroll through the entire thing and say at the end, I've read the entire thing, right? So it's a pretty big challenge to kind of present this information in a usable manner that's also very compliant, and in a limited screen scenario such as like mobile.
Yep.
And that's kind of like, you know, one of the things that we try to deal with and like, you know, optimize, you know, as we've grown as a business. But like Jim said, it is a very much, especially lending and other traditional first party financial services companies, it very much is very slow moving. A lot of the companies are big corporations that have traditionally done things for the past 80 years in one manner, some lenders out there still do a loan officer based approval process, right? And that just kind of completely clashes with what you want to do online, because you're not going to be able to offer a very, very quick response if some physical person has to go and say, are you creditworthy or not?
Right. It's interesting. We hear from the banks that they want to innovate, and obviously they have enormous regulatory pressure. And not to mention the millennial audience that we spoke about a couple times. There was an article that came out this morning, I think it was Atlantic Monthly, which talked about how different millennials are with not only their purchases, but how they interact with their money and how dissatisfied they are with the banks. And I think they mentioned 5 of them as being the worst brands in their minds. And so obviously this poses an opportunity, but also a very big challenge for the traditional players in the market. And so maybe some of you guys can talk about what will we see in 5 years? What will change, or how will these kind of idiosyncrasies, probably not much idiosyncrasies, but how these movements, kind of change the environment and force these guys to disrupt?
On the bank side,
Yep.
or on the, I would say that in my dealings, at least, I feel that the digital insights people working at financial institutions are definitely aware that there is the risk of disintermediation. They are keenly aware that there are a lot of technology companies that are moving into their territory. It used to be just user experience. Now they're moving into money movement. They're moving into the lending space. And so what I think that the biggest challenge banks see is that they become commoditized, right? I mean, they are a place where money is held and all innovation is happening with technology companies. So I think that there are banks that are, or sections of banks that are trying to make the change. They are definitely more collaborative with technology companies and want to bring that new technology in. But as you mentioned, I think right now the main focus is on compliance and regulatory stuff, the kind of the aftermath still of 2008. They're still dealing with that.
I do think the banks are open to change. I mean, I think they want to change. I think that it's just hard for them to initiate it internally. I think they're actually pretty responsive to outside forces. We work with the banks on building APIs and just connecting our service to theirs to make the whole process a lot more seamless. It's hard for them because it takes so long to actually move through an organization that is largely ruled by compliance, risk, regulation, and especially after recent events, after 2008 and 2009, it's even more locked down than ever. But I do think that they're willing. You just have to show them the value and kind of guide them through the process.
So, and interesting, if I may add to that, I think one of the trends we're seeing in Europe, at least, is that a lot of the larger financial institutions are looking to open up their APIs. So, kind of saying, here are my APIs, and I'm calling out to all innovators to come build things for me as a bank. That, of course, makes sense when you're kind of a larger financial institution, but that is also one interesting trend.
I think 5-year timeline is unrealistic. I
Yeah.
think you could add a 0 to the end of it and you still wouldn't see a lot of movement. I just hired a product manager recently, and I had a bunch of people interviewing. I had a bunch of people from some of the big banks come in and, okay, sit down, talk to them. Okay, describe how you build a great customer-facing experience. Well, I own this one particular thing, some spending thing, and my responsibility was vendor selection for graphs. I'm like, well, tell me more about that. Well, I had to find, we couldn't use any open source graphing stuff because we don't want to have any liability around it. So I had to find someone that would take liability for anything wrong with the graphing engine. So I was able to find this one graphing engine, and you're like, holy crap, that thing's like 15 years old. I think it might be written in ActiveX. I don't know. And so you make your decisions based on compliance, liability, cost, all these, like, where is good user experience in the equation of what you do? It's nowhere in there. Like, you want to deliver it, it's just, infrastructurally, it's impossible to do it. And if you look at how a lot of institutions are innovating, they're trying to buy up people that are innovative so they can then like crush their poor little souls and have nothing left at the end of the day. So I don't know what gets big banks to change. I don't know, after '08, you'd think that there'd be some incentive. And I think, unfortunately, the only thing that's going to get big banks to change is new players that come on the field and put pressure on them as their margins slip, as their revenues fall, as they start to slowly fade away.
So I think that's already started to happen, right?
Well, they
And the
keep,
question is, how are they going to react?
Yeah, and I think that creates a huge opportunity, I think, for fintech, because now you have this situation where they want to change, but they can't. Like, they can't find the crafting solution. As ridiculous as that seems to all of us up here, that's the reality, right? But what that does is create an opportunity for you to create a product and then tell them, all we need from you is a simple to consume API, which is something that is a lot easier for them to deliver. And it takes a lot of the onus of product building away from them and in the hands of the entrepreneurs that are frankly better at it to begin with.
but then they're going to start wanting things like, we're going to give you this API, but we want the ability to put offers in front of all your customers, right? So, I mean, they still can't get over, because, to their credit, I totally understand where they're coming from. They don't want to be a big, dumb, fat pipe for money, right? That's what they're trying to avoid.
But I mean, even if it's a mutually beneficial type of relationship, it takes them a long time to get there, right? Like, get moving on the proposal. You might be talking to them for 4 or 5 months, and then, you might have a framework in place, and then it gets killed in a committee somewhere, and then,
Well, there was, there were a lot of missteps back in 2008. They brought the country to the brink. So I think that it's also, it would be kind of unwise to speak as fintech companies as though that's where the solution is, there's not going to be any problems. Because mark my words, as soon as one of them has a problem, as soon as something bad comes out, there is going to be kind of a retraction there too. And
I mean,
revisiting
it is a very heavily regulated industry, and
Yeah.
I think it's the banks sometimes have it right in the sense that they are very, very concerned about reputational risk. They're very concerned about the things that have been in them in the past. It's just that I don't know if they're on the right side of the pendulum right now or not, right?
They're probably not. This is probably a pendulum has swung way to the other direction. It's got to come back.
It's kind of like what you see, since the financial crisis, the banks have really, really drawn back in terms of what markets they're lending in, what products they're offering, and that's one of the things that has created such a big opportunity, right?
Yeah.
Because
Yeah, if I could add one last thing there, I would say that what I think, we've done extensive interviews with millennials on some of the applications we're building. And the one thing that I think that technology companies need to be very cautious about is, and I was frankly surprised, is how savvy some of the younger generation, I'm talking high school, college kids, are about their privacy and about their security. And I think that it is something that is worth mentioning. They do believe that their data is their data, and while they're willing to give away some of it we were very surprised to find that for financial data, financial privacy and security, that they were very hesitant about sharing that and very possessive about that information.
Interesting, because they're so against the banks and so willing to, grab any new application.
And so want it for free, but
Exactly.
they still are paying attention to that stuff.
Just taking the discussion a little bit back more to the mobile first component. From a mobile perspective, what are some of the metrics that you use to kind of measure your app success? I think that traditionally companies have used engagement as a measurement of success, but the longer you're engaging, potentially the more time you're spending and thus not achieving the result you want. So what are some of those metrics that you kind of hold from a KPI perspective?
For us, frequency of usage is good, understanding and seeing what the patterns are between iOS, iPad. iPad's closer to web as far as longer sessions, less frequently. iPhone, a lot more frequently, shorter session duration. And then one of the challenges, just looking at metrics as a business, is if you've got a freemium service, it's conversion from free to paid by platform. And mobile is still a challenge in that area. For us, you know, iPad's got decent conversion, web has better conversion, iPhone doesn't have great conversion. And it's the challenge of like session duration, what people are doing with the apps, what their mindset is when they come into your app and what they understand about what you're doing. And it's probably a little more challenging for us than some other people because we do so much. So kind of figuring out, it's not a strict, you know, everyone wants to see like a really focused funnel that leads to conversion, to some kind of conversion event. And so the more your app does, the harder it is to get to that conversion endpoint. But for us, I think conversion is a growing metric that we focus on.
For us, a lot of our mobile initiative is about branding, so we actually just want you to touch the application, and it doesn't matter so much how long you're engaged with the application as that you're touching it at all, because it's relatively easy to forget about credit until the next life experience where you need credit, and we want you to remember our brand all the way through. So a big measure for success for us is how often are you interacting with mobile notifications. So if we send you an email that says you got an inquiry or there's something happened with your accounts, do you touch that and engage? Because that's bringing our brand front of mind again. Just the nature of our product, what we're trying to do, connect people with financial services, you're not getting a new auto loan every day, or right? So we only need you to really engage on a deep level over a longer period of time and then keep our brand in your mind throughout.
For us, you know, we are a first-party lender, so for us, you know, like engagement with consumer is very much focused on conversion through the funnel, and you know, there are some challenges with the mobile application in the sense that, you know, like I said, there are a lot of data, a lot of disclosures you have to disclaim. So you see, you know, desktop is a little bit better at converting than iOS devices, like iPad devices, but that's like phase one is kind of what we're looking at is like, you know, where you're dropping off, like, are you understanding this piece of information that we're presenting to you? Are you understanding the terms of your loan? You know, like why did you like, you know, exit our application, and then, you know, did you eventually convert, and on what device, right? And then the second part of it is, you know, we have full self-service on the loan from a dashboard perspective. So, you know, we're looking at how often you're logging in, checking your account statuses, like, and correlating that with your repayment history, because, you know, like it is it's to everybody's benefit when you log in many times. You know when you need to repay your loan. You know to have the money in your account when we withdraw it. You know, withdraw your payment. Or you're even voluntarily setting up payments beforehand. So those are the things that we kind of look at.
Excellent.
For us, it's frequency of use, not how long you are in each session. This is supposed to be a convenience, so the shorter actually is the better. So it's frequency of use and how many relationships you set up and how much you are networking with other people.
And does virality play a role?
Yeah,
Yeah.
absolutely. And that's setting up the relationships, the financial relationships. Yeah.
Which is such a great opportunity for mobile, utilizing the push notifications and other features that other mediums don't have.
Yeah, push notifications for us, I think, again, it's like the car analogy, right? You don't stop your car every once in a while to see if you have gas or if stuff's running, right? You've got an engine that's running in the background that lets you know when you need to take care of stuff. So I think mobile is just a really good opportunity to do that right.
I know I'm excited as my life gets more complicated with kids growing up and just more to do. It's exciting that these apps can actually help me stay in control and make me feel like I can pay my nanny without running to the bank anymore. She doesn't have a bank account, so it was quite challenging every other Friday. So I'm excited about what this kind of potential opportunity can do to grow more. $3 billion investment in 2013, wow. We're only the tip of the iceberg. What questions do you guys have in the audience for these innovators who are developing the leading mobile first apps in fintech?
So when you're starting a company in the financial services sector, security takes kind of a forefront. You're dealing with some sensitive data. Could you talk a little bit about kind of the initial challenges and the learning curve involved with such a regulated environment?
So security, I'll talk about kind of the user expectation of security. So before I joined Personal Capital, I worked at Intuit. I ran product management for Quicken. We built an app called Quicken Online, which was competing with versus Mint. So Mint, no one had heard of Mint. Who's heard of Mint now? Probably almost everyone, right? We were slow to market, didn't invest a lot in the whole effort. Mint kind of came up out of nowhere. We're like, holy crap, what do we do? And I said, you know what, let's poke on security. So we built this multi-factor authentication scheme for Quicken Online so we can go out and talk about how security was a big issue with Mint and how could you trust your finances to Mint. It seemed to play well, it seemed to make a lot of sense. And it was a big waste of time because no one really cared. Security is critical on the back end. You know, you need to be secure. On the front end, you need to make people feel like they're getting a benefit. So what benefit are you going to deliver in your application or your service to a user that's going to make them be willing to give you something that they wouldn't normally give you? And then what kind of security elements are you going to surround that with to make them feel good about doing it? But a lot of it is focused more on giving them a benefit that makes them excited about the benefit and makes them worry less about security. But all the while, in the back end, you need to make sure that security is the number one thing you focus on because it is the one thing that will absolutely kill your business if you screw it up.
Yeah, I think that's the key there. It's the one thing that'll kill your business if you screw it up. So while you may or may not push it to the user, it is a big concern. For us, it's it's part of our secret sauce. We have aggregation services that we sell to financial institutions and to other companies, and so security is a big part of our DNA. I don't know for a startup what advice I would have, except to tell you that it is very important for our services. We, as part of product management, we actively engage with our security teams, and they are part of the development of the applications. We have to kind of walk this fine line because sometimes they want to slow you down, and I think that we've done a pretty good job of getting to an understanding where we push on them, we meaning the product management team pushes on security, security pushes on us, to make sure that we're getting the best experience possible to the user without compromising their security.
Anybody else want to comment on that? Or?
Yeah, I just had something to add. I mean, from the perspective of a startup, because we were 3 people when we started, there are certain things that you're just going to do, like you're going to hire the outside people and you're going to weave it into your process and you're going to know what procedure, you're going to hire the right people who know how to do those things. But something that may not come obviously and immediately to mind, I'm glad it did for us, but I think it would have been terrible if it didn't, is just making it a part of your culture right from the start. So with every person that you hire, imprinting on them the importance of security, what it would mean if something went wrong, because there's just those kinds of intangibles will really define how your company grows, and that happens very quickly. And there's only so far you can go with third-party audits and weaving it into your process, and all of those things are really important and necessary things. But without the culture there, it can't add up to a secure product.
It's a really good point about culture. I think that's part of our DNA and definitely part of our culture at Yodlee, and it's critical.
I think, privacy is a completely different thing, but when it comes to financial data, that is also really important, and I would say best practice is to be very transparent about what you do about privacy, what you share, what you don't share, and so forth, because that can end up getting you in trouble too.
I mean, I think, as a startup, you want to iterate very quickly, but for financial information and security in a financial situation, you don't really want to cut any corners there. So you want to adhere to the best practices, address encryption, defense in depth, storage of secrets and data in separate locations. I mean, those are all things that may very well be a little bit annoying to do at the start, but you'll be glad you did it just because, what you'll find is, as a startup, if you're writing code, right, it never gets easier to put the bunny back in the hat, so to speak, than it is in the beginning, right? Like doing a large refactor for security's sake is gonna really kind of slow your velocity when you're right about the time to ramp, and then you're really scrambling to care about this type of let's say you're trying to grow, 200% month over month. Obviously that's ridiculous, but at that point, then you start really caring about security, and if you haven't already done it, then you're spending a lot of time doing it to something that's potentially not very value add in terms of acquiring customers, building features, etc.
Another question from the back.
Don't you think, excuse me, with the Target breach, within a span of 9 months, the Target breach, the Home Depot breach, even the JP Morgan breach, don't you think that now for consumers, privacy and security is intertwined and is at the top of their list?
Sure, absolutely. I think that people, we use aggregation as the core of our service. And you get people all the time who say, I don't want to use your service because I'm aggregating all these accounts and I'm concerned about privacy, security, everything else. I've been doing online banking since '96. And anytime I've ever had, like, the number one problem we all have is fraudulent charges, right? Fraudulent charges, I've always been the one to find out about them because I look at my transactions every single day. And so I know what's going on. I'm the one calling Amex or Visa or someone else and saying, I didn't do this charge. What happened? Did I lose my card? And at least for me, my biggest issue has been breaches that occur in the physical world. People swiping your card, making a copy of it. And I think, at least as an aggregator, someone that uses aggregation, the benefits of being on top of this stuff 24/7 outweigh kind of the attitude of, I'm going to try to be super secure by having as little online as possible, which means it makes it even harder for me to know what's going on. So the amount of time it takes from something happening to you knowing about it, because you're super secure, maybe you're only using paper statements. I fear for my mother who doesn't do anything online, it's all paper statements. She'll find out 30 days later that something went wrong. So there's kind of the reality of the world we live in and what we can do. And then there's, as companies, what we have to do to provide better security. Like at Personal Capital, we do device-based authentication. So from my perspective, I think of all the apps that do aggregation, I think we're the only ones that do this. I could give you my username and password to Personal Capital. You could download the app in the App Store, and you couldn't log in. Because it's going to call my phone or send me an email, and I have to give you permission to access it on your device. And that's something that was painful for us to do up front, because it's an extra barrier for end users, for the hurdle for them to get over. We've managed to make it pretty seamless and easy. And now with Google multi-factor authentication for Gmail, people are expecting stuff like that. So I would expect in FinTech more people to go to more secure measures, but also keep in mind that kind of 24/7 monitoring of everything going on in your financial life is probably your best defense against Target breach, Wells Fargo, JP Morgan, whoever else.
I think it is interesting to note that most of those were physical breaches. They happened at the store, at point of sale. I agree with you. I think consumers are very concerned about it, but we haven't seen much of a change in behavior yet. And frankly, I think the reason for that is because as consumers, we're not bearing much of the cost. We're bearing the inconvenience, but not the cost for these breaches. And I think it's to be seen what financial institutions, what the government is going to do. They have pinpointed that a lot of these breaches are coming from certain regions in the world and places where it's kind of been okay to do this. I think it's going to, companies will be able to make changes, but the bigger impact has to come from the large financial institutions, has to come from card providers, has to even come perhaps from the government.
Other questions? Okay, then, go ahead.
Well, I've noticed that a lot of regulatory things need to go through financial services are based on desktop templates. So when you start building mobile applications, the lawyers don't know what to compare them because everything has been templatized to desktop. Do you guys have any success in actually pushing back and actually helping regulators see things in a new light and help simplify the user experience overall?
Yeah, so you're right. It is very much, like regulators are kind of like in the same bucket, potentially even more so like kind of like moribund than even banks, right? So you do see a lot of like just the general number of disclaimers, like what you're legally obligated to disclaim, the amount of information, what is the requirement online for consumer to acknowledge these agreements. It's very much there's a lot of requirements, but it's also very, very gray in certain areas. Like So what we kind of done is, you know, like, I mean, like, I don't know if you can get around it in the sense that if you want to be legally compliant, you have to do the research. So like we have like for us personally, we have like, you know, a pretty large and comprehensive like legal team that works with best-in-class outside counsel in order to kind of like craft the, and they work very closely with our product management, with our designers, in order to kind of craft an experience that's like both compliant as well as, you know, a little bit like less obtrusive than on mobile than it is like, you know, than it otherwise would be. So I mean, I think it's, there's certain requirements that are very, very strict and other requirements that are more gray, and the gray ones are the ones that you can kind of work with legal, with outside consultants who have the experience with the regulators to kind of say, you know, the regulators will basically say like you have comply with the spirit of the law. This is what you disclaimed, and you did it in a like potentially not this exact same manner that we traditionally see it, but it's okay. And like, you know, it's you're never going to get 100% comfort there, just because it's a lot of times when you get audited, when there's regulators, it is off personal like opinion by the regulators themselves. But I mean, like, I think that's the best you could do.
I think for user authentication, authorization, those things they're constantly evolving. Mobile applications, the mobile device gives you a lot of ways of streamlining that process. And for us, it's been, first we have to get educated as a product team, then we have to educate our legal team. And a lot of that is show and tell, and then get them to help us, you know, try to educate at the next level. So I think that there is a lot of evolution. And then, you know, we're going to get into heavy duty biometrics and things as well, right? So this is an evolving, it is evolving. You need to stay on top of it, and there's a lot of show and tell involved as you convince your legal teams and then regulators.
We have time for one question, if anyone still has something they want to ask. So I'd like to personally thank Paul, Jim, Ryan, and Katy. Before I let you off the stage, tell me your favorite mobile first app in Fintech, and it can't be the one that you created.
So it has to be mobile first?
Yes. Well, a
So
large
let me
mobile
just
audience.
tell you, I have to say, talking about banks, I have been very impressed with Chase's mobile banking application. If you compare it to all the other mobile banking apps out there, it's really intuitive, it's easy to use, it looks really good, it evokes all those emotional good feelings that you should have when you think your finances. So I think hats off to them, they've done a really good job.
I think Fidelity is pretty good. I use the Fidelity app all the time. What struck me was they actually allow you to do things not logged in, which almost no finance apps do. So if you start thinking about, you know, if Fidelity wants to acquire new customers, if someone says, I can use the Fidelity app and get a benefit from it, and getting that benefit convinces me to become a Fidelity customer, then that's an app that they can do customer acquisition with, which is, I think, what financial institutions typically don't do. And so I think they do a really good job.
Yeah, I actually use Chase's app as well. I think we were talking about this the other night, that I think that they're one of the best banking apps out there. One of the better technology banks, as far as banks go in technology. I think that they're doing a pretty good job.
I don't want to sound like I'm a parrot, but I do like Chase's app as well. But I guess I use, I don't know if this counts, this may be a little bit more payments related, but I do use Venmo a lot. It's it's easy to use. It's if you have a lot of adoption among your friends, it's very simple to pay them. They don't have to have the same bank.
Nobody brought up Bill Guard, my personal favorite. So, okay, well, that's it. Thank you.
Thanks.